Good morning. This is Klynn from Remax Real Estate Center and Lisa from Global State Mortgage.
Good morning.
Hey, happy Thursday, everybody.
Happy Thursday, last Thursday of July.
It is. Yes. I actually forgot it was Thursday until she came and reminded me. But yes, So it's been a crazy week and lots of things going on, and the weather's been kind of nice today.
It has been beautiful.
Yeah, a little rain yesterday.
Some rain yesterday, which we really needed.
We really did. Yeah.
To kind of clean things off.
It is. So we wanted to talk to you today a little bit about, well, where do you come up with this money for a down payment?
Right.
You know?
Can you buy a house when you don't have one?
Maybe.
Maybe.
Yeah. And do you have to have 20% down?
No.
That's the big one. A lot of first-time home buyers, particularly, you've never done this before. Oh my gosh, I have to have 20% down so I can get the better financing, and what are my options? I don't have that much money saved. So we're going to talk to you a little bit about where you can get that money for your down payment, and that, yes, there are options other than 20% down.
There are, and I would say that some people still think I need to save for that 20% down.
Right.
And interest rates are still amazing at the moment.
Oh my gosh.
And
yes.
so you actually, sometimes there's calculations even just to do to say, if you wait, and how long is it going to take you to reach 20% down?
Right.
Or is it better to buy now with where rates are at if you find what you need?
Correct.
And as long as you're good with the payment, and you can, then there's other options too. So sometimes it's better, you think you still want to have 20% down, but it's good to look at your options.
Right. So let's talk about conventional loans.
Okay.
Okay. So people typically think, if I'm going to get a conventional loan, 30-year, I have to put 20% down. So for conventional loans now, what are their options?
Yeah, so we actually have some great, Fannie and Freddie came out with some really fantastic programs. You guys don't care about this, but they're called the Home Ready and Home Possible loans by Fannie Mae and Freddie Mac. 3% down.
Oh, wow, that's
so
bonus.
Conventional loan, which means you're not as concerned with appraisal issues and things like that. Conventional loan, mortgage insurance, drops off. All those things you get with a conventional loan, except 3% down.
Wow.
Which is great. So for these programs, to get some of the benefits, you have to take a home buyer's course. They're really easy, and it's great anyway sometimes to take those. But yeah, and if you don't have the 3% down, that grandma and grandpa have 3% down to help you out, or parents, or Uncle Joe, or Aunt Betty, like gift funds are also possible with that.
Yeah, so that's great. So make sure you keep up with grandpa and grandma's birthdays, and call them every once in a while.
Those cards, calling, stopping by.
Thank you notes, all those kind of things mom told you to do. Yeah.
You should do those things.
Yeah. So gift funds, do you have a maximum, minimum? What can you do with gift funds? I mean,
they can go towards anything. Gift funds are really, so we have to document gift funds, just that we have a gift left for it. So a conventional loan, actually gift funds are super easy.
Okay.
You're just documenting that you got them, and we do an easy process of getting a cashier's check.
Oh,
that way you don't have to, the least amount of documentation as possible.
Okay.
But you get a withdrawal slip, get the check, and get a gift funds letter.
Wow.
So
pretty nice.
It's really nice.
Yeah.
And it's really easy, and it's sometimes I'm just like, it's too easy, right? But it's really nice.
But that's really for conventional loans. Let's talk a little bit about how gift funds may work for an FHA loan.
That is a little bit different.
Okay.
So you can do it, and again, even for a conventional loan, you can do it for just your down payment, or you can do it for down payment and closing costs.
Okay.
So you can do it for all of that. On an FHA loan, there's a little bit more documentation. So grandma and grandpa, or parents, or Uncle Joe, Aunt Betty, they also need to give you proof that they had the funds to be gifting to you.
Okay.
So it's a little bit different, a little more documentation, in that we have to show that they had it in their account, because what they don't want to is they don't want to get them to go take a loan out in their name that really you're going to pay back.
Right.
Right, and so there's
the trail of money is a little bit more important.
It is. The trail of money is just a little bit more important. But a lot of times we can have those people that gift the funds actually even talk to me directly if they don't want to give it to the borrower. We have grandma and grandpas, or whomever is the gifters.
Right.
We'll call the loan officer in particular and talk to them and give that to them instead of giving it to the person buying the house.
Perfect.
So that keeps their privacy a little bit.
Sure, exactly. But when you're dealing with FHA, USDA, VA, you're dealing with a government entity, so you're going to have a little bit more checks and balances there. So that's a little bit why.
Right.
So conventional. So really, you can put down 20%, 3%. anything in between.
Anything in between, 3%, 5%, 10%, 15%.
You've got lots of options there.
Options.
So yeah,
Options
absolutely.
are good.
So what other sources of down payments are there?
So you also have you can have a secured loan. So you cannot go just get a personal loan. I don't want you taking an advance on your credit card,
right?
And getting, a $5,000 advance. That is not secured funds. So please don't do that. The loan officer will love that,
right?
Because we can't use those funds. But if you have a car that does not have a payment on it, or you have, you own your car, you could do a secured loan. We just have to put that into your debt to income ratios. If you have a house that has equity, you could do a home equity line of credit, and you can get funds from that house because it's a secured loan.
Okay.
We just have to know the terms of that loan, and as long as you still qualify, that would be an option too.
Okay.
Cash in your mattress.
Yes. What do you do with all that money you squirreled away? Yes.
In the cookie jar, in the wherever you keep it.
I have a little, the change from the billfold every day goes into a little, so what do I do with that money?
Right. You deposit it way before you want to buy a house. So if you do have a lot of cash, there are some programs, but really cash, we can't document where the cash came from. And so depending on how much it is really great. If you're thinking about buying a house and you're planning on using that, the best option would be to put it into your account at least 3 to 4 months before you plan to buy a house, and then it's in there, and then that's considered I've just lost the word for it, but it's your money that way, and so we don't have to document it that way. It's in there.
All right, super. Anything else for down payments? Oh, you know what? There are 100% programs.
Yes. Oh, and also before we get that too, there are some down payment assistance programs.
Oh, okay.
And so we do, and you think that they would be for first-time home buyers because a lot of people call in and they just want what the first-time home buyer programs are. And a first-time home buyer technically is actually somebody who hasn't owned a house in 3 years.
Correct.
So that definition is a little bit different. But also, a lot of times first-time home buyer programs really just mean you don't own another house. Okay. So we do have a program depending upon 3% or 4.5%. That you can get, and you have to meet some income guidelines. So down payment assistance programs are out there. You just need to call and ask us if you would qualify for one of those. And then there are 100% financing programs.
Yes, there are. They're a little bit limited on where you can buy in some instances. The USDA or rural development loans. This, like for example, the city of Ames, Ankeny, Des Moines wouldn't qualify because it's really for rural development.
Yeah, small community.
Right.
Small community.
Yeah. So if you're looking outside of those areas in the smaller communities, 10-minute drive to Ames, if that's where you work, you could utilize the USDA loan, which is a great program for those that are just getting into it, and it is 100% financing, no money down. Yeah.
So actually, Kayla and I were talking. I think that we're gonna maybe next week or
talk a little bit more about those.
Talk about that and a VA loan. Those are two really popular 100% financing loans.
They are.
That are really great loans. That if you qualify.
Take advantage of it if you can. And I guess I would advise if it's going to be a long-term purchase too.
Right.
You don't build equity as fast.
Right.
Correct? So we'll talk a little bit more about that.
We'll go into more detail about that.
So so there are really no what we call back in 2006 through 2008 we had first-time home buyer programs where you had grant money and those kind of things. So really we're looking at that other program where you can the down payment.
The down payment assistance, right. So
program.
You don't have to be a first-time home buyer. You just, maybe the equity you got out, or maybe you're still in a position that you owned a house, but you just don't have a big down payment, or your finances are tied up, or whatever the reason may be. But there are down payment assistance programs out there, and you just can't own another property to take advantage of it and see what those options are. And I would say, like, the market right now, still, like, things are still coming on the market.
They are. Every day there's some new inventory coming on, and it's kind of fun to see what's coming on out there. But it's still going off pretty quickly, depending on the location, price range, condition. All those kind of things dictate how well a house will sell.
Right. So you could not have maybe your down payment totally, if you have less than that, sometimes it's worth it just to take a look right now to see what's out there. See what's out there.
Absolutely. And then we'll talk again later this fall as this new program for the your
savings account.
For your savings account. That's a new program that's taking place at the beginning
January
of 2018. Right. So we'll talk a little bit more about how you can save for that down payment money with that program.
Right. But you still would not have to have 20%.
That's true. That's right. No more 20%.
No more.
Yeah. But for more information about this, how how much percentage down you put, what type of loan program you qualify for, what types of homes would qualify for these different programs too. Sometimes that comes into play. So be sure and give us a call. We'd be happy to help you.
Yeah. PMS, call us.
PMS?
No, private message us.
Oh, yeah, private message us. Like, Lisa, what is that all about?
Okay, we probably better quit for the day.
Yeah, we probably better. Yeah. So anyway, there always going to be a laugh or two when you talk with us. So
That's
anyway,
right.
see you next week.
Bye.
Bye.